Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex. Now, on the daily market, the main idea, the main goal is that we can create a plan for tomorrow so we're not approaching it blind. We want to make a plan that we can trade and then execute when the time comes. And we're going to look at our big six markets, and that's going to be gold, crude oil, and the Dow for futures. And then on the Forex side of things, we're looking at the euro, the pound, and the Japanese yen. So overall, it's always a good thing to kind of understand what is going on in the bigger picture. Today is the first kind of real day, quote unquote, with Trump in office, and we had him speaking today at around 1:30, I believe. I actually didn't tune in to watch that one. I've been trying to keep up on them, but didn't get a chance to watch that one. Either way, we're going to have to deal with that for a little while. With all of this presidential stuff finally behind us, now we have to start dealing with, okay, now he's in office, what is the response to this, and what's the response to this, and what's the response to this? So we're in a still fragile state in the market, but looking for, hopefully, at least a little more consistency, a little bit more, I guess, regular, whatever that is, regular markets back coming our way, fingers crossed at least. So looking at gold first on the list. Gold, it had a big spike higher at around 10 o'clock, and we made our way back up to the highs, and now we're starting to see it sort of pivot its way lower. But really, what did we accomplish? We have a big range, right? We haven't really been able to get out of this. We found a high actually late last night, and then a move down to a new low where we found support, and now we pushed our way back up into resistance, and we're just kind of hovering around this middle area. Now, this middle area between 14.9 to 14.2 seems to be a big area of support and resistance. It held price earlier several times as both support and resistance, so it is a level that we need to keep our eyes on, and right now we're actually cycling off of it. So generally, when you have this kind of middle ground between a range, usually it'll bounce around there for a little while. You may get some nice setups off of it, but eventually you're looking for them to break up or down to the major levels. Buy low, sell high, and try to stay out of the middle. If you're going to get in the middle, make sure that you're at least around that major area of support or resistance. Now, the overall move that we're getting was looking like it was going to start being a little bit of a kind of a wedge pullback, but now we've made a higher low and we haven't been able to get back down there. So this could easily tighten up to a smaller little wedge, and we may not be able to get our way back down there. This is a relatively bullish indication of trying to see the buyers coming in off that 14.9 level and trying to gun for the highs. Now, it's kind of hard to ignore the fact that every time that we've had this kind of bounce, they've tended to trap an earlier area before getting some continuation. Now, what do I mean by that? Well, if we look at the last time we cycled up into that area, they tried pushing down, they came back, and they trapped it again. And then they trapped it again, and then they got the move down. If we look back over here, they tried pushing down, they didn't quite get the trap, and then they got the big push, and it was a little too much for the buyers to cycle in, and it gave a drive lower. So this could just end up being a big trap. Now, the major area that I would really like to see at the moment for possible trapping would either be a retest of the lows, especially if it can push down into this low area to buy there, or looking for a possible trap up here. This is the last time that we saw the buyers really give it a shot. It was a nice bull channel up, and then they just kind of gave it all up down into support. So this is the next level or line in the sand that buyers down here are looking for. Now, it may only be enough to cause a small little bounce. It may be a lot to cause a big rejection, but either way, I would expect to see some bouncing there. If we can get a break above that, seeing a pullback for support and then a run back higher would be a very nice option. Otherwise, if this is ending up just being a fake out and it slams lower, then you're looking to use this as resistance to go back down to the lows of the range, down to that 1209.8, down to 1209 area. So really both sides of the fence are totally fine. Looking to buy low, looking to sell high, try to stay out of the middle, recycling off of that major area of support, so possible continuation to the upside at the moment. Over on crude oil, we had a nice bear trend working its way lower, very wide bear channel working its way lower. And this bear channel, it kind of split itself up a little bit. And you can kind of see that, where we had this earlier channel working its way lower, broke down, looked like it tried to make another one, and then broke down again, made another one, kind of broke higher. So arguably, you could break this up into several little sections. This would be the first section here. They broke down. That would be the next section. And I really don't think there's another one after that. If there was, it'd probably be here. And you can kind of see all of them worked for some period of time, and they all look about equidistant to each other. This one's about the same size as this, about the same size as this, about the same size as this. So this bear move down is appearing to be sort of tiered. It's working its way lower, and it's getting more aggressive. Now, we are getting a very strong bullish correction, but notice where all of the levels of support are coming in. It's all the same places. They bounce there, they break out, find a little resistance, break out above it. Find a little resistance, try to break out above it, and they falter around that area, bounce back up. Find support, try to break down, find support. So all of these levels appear to be of some interest at the moment. Now, we are getting a small little wedge formation here that is appearing to try to break out to the upside, but noting the follow through is really bad. And that's also coming around that same earlier high. They tried breaking out above it. They made a lower high and failed, and then slammed lower. So even if we do go higher, this level is going to be a big area of resistance where the sellers may just try to pile drive it lower. Either way, though, or along the way of the sell side or the buy side, depending on where we are, you're going to have to pay attention to those areas because they've been working really well so far, and it's not something that I would at least want to go against. Now, the general direction at the moment is bullish, but with a bigger picture on the bears. Given that we have this lower high, we've had several pushes higher, arguably it even formed a little bit of a wedge top, and then it failed to make a new high. This is going to be the big line in the sand, this major high up here. Sellers do not want this high to break just underneath that 53.10 area. And if it does, we could be in store to run all the way back towards the highs here back at the 53.50s area. So as long as we stay below that, I'm looking for selling pressure to go back down and reach at least back down to the lows. But we do have to keep in mind that the last time we were down there, just like we're seeing up here, we failed on the breakout, and then they couldn't even come back to retest it. So this zone inside here would be a much more likely area with a major target being at 52.40. So looking for the breakdown, looking at this, it kind of looks like it's going to be a fake out. Depends on what this current candle does, but overall, potentially if it does break higher, as long as it doesn't break this high, we're good to go to the downside. If it does break the high, then you're looking for a continuation after a pullback to the upside. Over on the Dow, to wrap up the futures market, another strong range on the day. We started the day off with a gap down, worked its way lower, went range bound for a while, found a new low, and then immediately failed up to a new high, and then immediately failed down to a new low, and then immediately failed back up again. And now we're sort of in the middle. Now, just like we saw on gold earlier, there does appear to be somewhat of kind of a middle ground here that we can see playing a part. And that's a level that we're going to want to keep an eye on around that 19,725 or so. Give or take 5 or 10 ticks on plus or minus. But right in the middle of this area, it seems to be a good, strong area of support or resistance. We are trying to break out above it. We just failed that most recent cycle higher, so we may be in store for a little pullback. I would love to see them pull back down to around that 19,710 area to be a buyer. But again, we're trading in a range, and we need to be looking to buy low, sell high, and stay out of the middle unless we're cycling off of major support or resistance. And even then, it's going to be a little bit of a challenge. So currently, we do have the overall bullish intention here, but we're seeing weakness beginning to form. So one of two things. Either we get a snap lower, buy the trap low for a quick scalp, otherwise waiting to get down to the lows here for the range low buy, or we get a big breakout to the upside, a failure, a bullish wedge breaking out higher, not likely to succeed, and then look to sell the highs back down to the lows. Either way, we're kind of in the middle right now. I would rather sit on hands and looking to wait to sell around the highs or the lows for the best next setup. Now, over on the Forex pairs, we have the EURUSD, again, mostly a range. We started off with a beautiful bullish trend, and once they broke down, they retested those highs, and then it just went downhill from there. Lower high, big move down, higher low, oh, but lower high, oh, now we have a new low, and then another new low. Okay, well, maybe we've got a bear trend. Oh, never mind, just kidding, back up to the highs again. So very back and forth. Now, it does seem to be that the finalization of the moves comes in two pushes, right? We have a big move down, 2 pushes lower. A big move up, we have 2 pushes higher. A big move down, 2 pushes lower. A big move up, we're looking for 2 pushes higher. So what I would like to see is a secondary push to go above the highs at 75.47, and then look for selling pressure to push the market right back down again. And on that cycle down, looking for you guessed it, 2 pushes down. Now, wherever that happens to be, that could be right here. It could be down here. It could be much farther down. Either way, though, looking for 2 pushes on both sides for the completion of these moves. And right now, we're attempting to cycle off of the high, so I would much rather be a seller around this area, if a little bit higher. Again, 75.47 seems to be pretty nice, maybe even a little bit above that. But at the moment, looking to sell and drive the market down into support at around 71.77. Over on the pound, we have a beautiful, beautiful run higher. Just a gorgeous run. Went a little bit range bound. Almost looks like a head and shoulders with a little bit of a slant to it, but it ended up continuing higher. Now that we broke above the highs, they're using that area as a major area of support, and we're continuing back towards the upside. So with this bullish continuation that we're getting here, we're trying to break out of the wedge. We may be looking for a retest, and buyers are likely in right now. This overall wedge top, it's not allowing a whole lot of room for the buyers to get in, and what I would really like to see is a pullback. I don't want to buy this far up. So what I would really like to see, a nice pullback down into possibly the bottom of the wedge, but even further down into the sweet spot. Notice how these two line up together. We have the bottom of the channel and the top of major inventory at 24,748. That would be a picture-perfect scenario for possible buying pressure. And if not, if it takes a little too long to get down there, we may be looking for just a trap low underneath that 24,655. Either way, I really want to be a buyer, but either right now for a small scalp or I'm waiting for a slightly bigger move. And my preference is, on these types of time frames at least, a little bit of a bigger move. And then finally on the dollar yen. Now the dollar yen, quite a bit different than some of the other markets. We still have an open weekend gap. We opened down here. They tried to close it, and they couldn't. This is where we closed on Friday, and since then, we haven't been able to close that weekend gap. And very frequently, when you have a weekend gap, at some point during the week, that weekend gap will fill. Now, one of two things happens when that weekend gap fills. Either it gets a head fake above it, shows failure, and dumps all the way back down to the low, or it slams above it, they try to get the head fake going, it fails, goes back above, all of the sellers exit at break even, and buyers reaccumulate for a big run towards the upside. So those are the two situations that I'm looking for. I'm either looking for a head fake and a move down, or a breakout, a pullback on failure, and a move back up. Either way, though, that's pretty far above us at the moment, and we're pretty far away from that. So that may not be until tomorrow, it may not be till Thursday, but either way, at some point this week, maybe even early next week, I'm looking for the market to get up to that 114,569 area. Now that said, we're at the bottom of the channel. We have a very huge, broad channel working its way lower. Transpose that line to the bottom, we find support, we try to break out of it, they find support there again, and now we're breaking down once again into support. 112.819 down to 761. In this zone, the reason why this is marked up is mainly because we already had a blast through the bottom. They tried getting a correction up and holding it, they're failing. Huge move at the very end of the day, not usually going to be sustainable movement. So wherever this candle closes, you probably have a better bet that the buyers are going to come in around this area. They may even push lower, but chances are buyers are going to be seen down here for a run back up towards the highs. Now the area of resistance in this case is going to be at 237 to 192, 113 that is, in that location. And if they can break above that, then we may get that run back going towards that weekend gap. But until we start seeing the buyers really show up, we have to be thinking short-term sell side. But at the moment, with this big exhaustive move down, I'm thinking more buy side currently, just to take some of this back. Not very sustainable movement at the very end of the day, and probably going to give at least some of it back, maybe up into that area of resistance where you can potentially sell once again. So overall, kind of a range-bound day that we had today. Some markets had some pretty good movement, but some not so much. So just play it a little bit safe this week. Again, we're dealing with some slightly fragile markets. We do have some news going out tomorrow. Not a ton, but we do have some to keep an eye on for all time frames. We have the European session coming out with the German manufacturing tomorrow morning. For the US, we have the existing home sales, and then for the Australian side of things, we have the CPI. So we have some big news across the board for pretty much all of the major markets. Not getting any for some of the Asian pairs, but either way, that's kind of what we're looking at the moment. So tomorrow may, be a little bit back to normal, but still with a fragile market. So that's going to do it for this one. As always, if you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. And like we always say, make that plan, trade the plan, follow your rules, and you will be A-okay. Until tomorrow, enjoy the rest of the day, everyone, and we will see you all later.